The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern time. We got some strong retail sales out this morning. We got markets pretty calm. We have the S&P right now flat at 4678. We got the NASDAQ 100 negative 16 points at 16,171. The Dow up 62 points. We got some action on Home Depot to the upside this morning. Got some action on Walmart as well. A little bit of a reversal of the gains Walmart had pre-market on their earnings as well. Russell negative by 6 points right now, trading at 23.95. Some action in crypto overnight, to say the least. You get action all the way down to 58,000. Folks, you back it up about 24 hours ago, just 7:30 a.m. yesterday. You're talking about trading at 66,000. You give back $8,000 almost on the price of Bitcoin to 58,515. You've bounced a bit. You're still down about 5% right now in the session. That's $3,200. Let's check out Ethereum as well. Ethereum, pretty similar action. We dropped $700 on Ethereum. You want to talk about a store of value, folks? Just from yesterday morning in a 24-hour period, you lose $700. That's talking about almost a 16% move, something like that, 15% move. In Ethereum, again, we've bounced a bit. Ethereum down 5.5% right now. Crude oil, 80.75. We were higher. We were as high pre-market. You're talking about 81.45. We've pulled back a bit yesterday, 79.30 in that crude contract. Gold had caught a bid this morning, has pulled back slightly. From 8:15 a.m., we're down about $12 from that high in gold. Spikes higher at 4 a.m. We pull back from the highs. We're trading right now basically flat from the session yesterday at 18.67. Silver's up 6 pennies at 25.16. And notes and bonds, we're getting a little bit of lower price and higher yield. We're now at 1.63%. We were at about 1.6, just under 1.6 yesterday on the show. Ticking up slightly. We're seeing lower price, higher yield. You put this thing on a daily, you look at where we are, bumping up right against the lows we had. Back it up. I mean, remarkable. We're talking about almost a month ago, 129.31. You're at 130.05. You're within about 5 or 6 ticks of breaking that low that we had back on October 21st in the 10-year. The 30-year is down 3 ticks right now at 160.05. And you see the action in terms of a little bit of a divergence in terms of the yield curve. The 30-year would have to get it all the way back to 157 to correlate to that price action. So not quite as much of a rising yield on the 30-year as has risen on the 10-year on that one. All right, let's jump over to the VIX volatility index before we jump into those retail sales numbers. You take a look at it on the daily. Why not? I'm going to pull this up on a weekly. Just to give it some context here. The trend is your friend, folks, and the trend in the VIX is lower territory. I mean, look where we've been. You look at where we are since basically April. Yeah, you've had about 3 or 4 spikes above 20, 25, 28, 25, 28 yet again, but we've been chopping around at about 16 or 17, give or take. Again, each bar representing 1 week on this chart. Remarkable that we were at lows of 14.25 back in June. Market not quite comfortable with a 14 VIX right now, but sitting pretty comfortably at 16.91. We take a look at the 15-minute action on the VIX. Outside of last week's spike to 1990, pretty tame action on the volatility front. All right, let's jump back to retail sales. We'll kick things off. Jump the most since March. Topping forecast is the headline. Purchases rose 1.7% in October without adjustment for prices. Receipts rose in nearly all categories, including electronics. I think it was 11 out of 13 categories is how they get into it. Let's get into it. The value of overall retail sales, 1.7% last month, the most in 7 months. They got it down here. And there's your acceleration. You look at where we've been. You got to go all the way back to March when we got that huge explosion to the upside on retail sales. Following an upwardly revised 0.8% advance in September, excluding gas and motor vehicles, you still had a gain of 1.4%. Think about that, right? All the rhetoric's about gas and motor vehicles. That's not fair. Maybe it's about food as well. But geez, gas, and automobiles, motor vehicles, two of the biggest ones that we're all aware prices are going up, especially if you're in the market. You take those out, and you're still talking about 1.4%. The figures are not adjusted for price changes. Median estimate was looking for 1.4% in the overall retail sales number. There's your graph as we showed it. We have Walmart and Home Depot, pretty strong numbers. We'll get into those on their own accord. Yes, and according to the Commerce Department, 11 of 13 categories, electronics and appliance stores saw a big surge in sales, as did building materials. Non-store retailers, which include e-commerce, motor vehicles and parts, were at 1.8. Gas stations were at 3.9, the most since March. That is quite a number that's hitting those Americans at the pump, man. 3.9%. Most people filling up their car, even when you're working from home, folks. You're still filling it up if you're doing just normal lifetime activity stuff. Yes, the so-called control group, which are used control group sales, that is how they calculate GDP and excludes food service, auto dealers, building material stores, and gas stations, advanced 1.6%. So strong numbers in a big way. We look at when that number hit, though, pretty tame action. There's your 8:30 volatility. We were as high as 46.85 briefly. These are 15-minute bars we're looking at. You're down to 46.77. We had lows at about 5 a.m. of 46.72. The market pretty much just takes it in stride as we march on. All right, let's jump over to some of the companies with earnings. Two of the big ones this morning, Home Depot and Lowe's. Home Depot is up about $7 right now. Their conference call beginning at just when this show began at 9 a.m. Looks like that's going okay. It's holding near the highs. We jump over to Home Depot. Walmart and Home Depot, you're going to see that Walmart has a little bit of a pullback on their action. The comp store sales on both of these are just crazy when you think about the metrics they're dealing with. Comp store sales, 6.1% for Home Depot. That's above the 1.5% average estimate that analysts were looking for. Earnings, $3.92 a share. That beats expectations. Revenue, $36.8 billion, well above the consensus. Customer transactions fell 5.5%, but the average ticket size rose to $82.38. So they're doing less transactions, but people are paying more. Does that theme jive with what we've been hearing maybe recently in terms of people paying more? Home prices have appreciated, they're talking about. So that is the top line number. Home Depot higher on those numbers. Now, Walmart gives it back, which is interesting because they had some pretty cool comp store sales. You're down about $1 on their numbers. Conference call beginning at 8 a.m., so about an hour ago on Walmart. You were as high as $150.99 initially on their numbers. We jump over to the action on Walmart. Boost the outlook as sales rise despite inflation. I don't know if it'd say despite. Maybe sales rise because of inflation could be one way you could write that headline, right? Comp store sales will grow more than 6% this year after excluding fuel, which is quite an exclusion when you think about that. I wonder how much fuel they do. Market was looking for, that was a previous forecast of 5%. They had more than that going on. 9.2. Let me get this number exactly. Walmart same-store sales increases higher than the pre-pandemic. I mean, think about this. I got to get the comp store sales and how they list it. But that is the number. We'll finish it up when we get back. Here it is. 9.2% at U.S. stores excluding fuel. Market was looking for 7%. They upped their outlook. Adjusted earnings $1.45. We'll take a little bit further look at this when we get back. We're going to be talking to our man Kevin Hincks from TD Ameritrade Fast Market. We'll be right back, folks.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&P is negative by 4 points right now. We get the NASDAQ 100 negative by 34, Dow positive by 48. Let's jump over to our man, Kevin Hincks. Every trading day, folks, noon Eastern time. Kevin Hincks, Tom White, the team at TD Ameritrade Network, Fast Market, breaking down the day's market action, walking you through hypothetical trade setups. We got a big week of retail earnings this week. We got some retail sales this morning. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, yesterday's show was Walmart and Home Depot. Today's show will be Target and Lowe's, the other two competitors of them. And then, we'll slide in the last segment to TJX, the other retailer. So a lot of retail today on today's show, both in big box retailer and in home improvement retailer. So far, it looks like the home improvement trend is still strong and resilient, as Home Depot put up good numbers. For all indication, Walmart did too, although their stock is down a little over $1. But Home Depot is going to start the day off strong, and we've got some economic data that was a little on the warm side in terms of retail sales and import-export prices. But so far, this market is got a couple movers and got a couple, overall indices are pretty close to unchanged here, Tommy.
Yeah, pretty remarkable. You just summed it up well, Kevin, in terms of Walmart, pretty strong numbers. They reverse a bit, down slightly. Home Depot, strong numbers. They're going to open at an all-time high today. You have Lowe's right near an all-time high. They've had their run. Target, of course, been quite a juggernaut as well. And the retail sales itself, Kevin, I mean, these comp store sales that we're looking at for Walmart and Home Depot, man, just strong numbers for the type of sales that they're dealing with. And then the retail sales is a strong number as well. We look for their competitors tonight. But general market-wise, how do you feel in terms of, a pretty calm reaction when we get a strong retail sales number like that? Seems like the consumer, combined with the two numbers we got for Home Depot and Walmart, pretty strong numbers, man, as we, almost get towards the later part of this earnings season, but pretty strong numbers in light of what they're doing, the numbers they're doing. And then, of course, I think it was a Goldman out today, putting 5,100 out on the S&P, talking about margins not being a problem. It's just relentless, this market, to the upside right now, Kevin. Do you see anything maybe stepping in the way? Where are you looking for the general market right now?
Tommy, the most powerful force in the United States economy is the U.S. consumer. And the U.S. consumer has pockets and savings accounts full of money. So I think from a retail perspective, this third and fourth quarter and into the holiday shopping season is going to be one for the ages. And I think everyone should brace for that. That's what I think. The U.S. consumer is a powerful force to be reckoned with. And I think that's what's going to drive, I think some of the retail sales that you're seeing, some of the data there is the auto sector starting to thaw and bring out. I've got a buddy in the car business who said he's now getting about 25% of his allotment of cars. That's better than what he was getting before, which was almost zero. So
wow.
The autos, chips are starting to flow to automakers. Automakers are starting to get their cars back to dealers. That's a really good sign for the overall economy. That would affect some things. Now we've got crude oil back close to $80 after trading below 80 yesterday and the day before. So that might be a little better scenario for overall inflation. We talked about that a lot, how over $80, things get a little dicey in the crude oil market. So I think that doesn't mean crude oil can't go higher. I actually feel it can, because I don't believe this administration has any real long-term plan for crude oil. So crude oil could be something really to watch. But overall, I think this economy is firing on all cylinders with the United States consumer with pockets full of money, Tommy.
Yeah. The numbers this morning line up with all of that, man. You can't deny that. And it's interesting, Kevin, I was just thinking about in my head, all the talk, right, is that supply shortages over the holiday season. You'll have items that are out of stock. If you're going to get your Christmas shopping, get it done early. Talk about retailers maybe even loving that sentiment, right? Talk about creating a fear of missing out, of being able to buy Christmas presents. You better get them early. And I said to myself, people just aren't going to stop shopping, Kevin. You get your presents early. Yes, you put that money out there, you get your presents, but you get your presents done early. There's still going to be an impetus there to be doing some shopping, and we might see one of the longer holiday seasons if people already are feeling the need to get out there and get their items. Meanwhile, we know sales just persist all the way through. There's something truly American about being able to pump out a sale and fear missing out on those savings during holiday season, man.
Tommy,
so we go from there.
I can only tell you about my family, and whenever I do Christmas shopping early, you know what it equates to? More Christmas shopping later and more gifts.
Exactly, man. I thought about it today when I saw the Walmart numbers. I mean, the size of the numbers that these companies deal with, Home Depot as well, man. To do comp sales that are just, middle single digits, even 5%, whatever it is, just staggering numbers. I said to myself, man, just like you said, people are out, they're already shopping, they're going to keep shopping, and nobody stops shopping as December rolls around for Christmas season. Exactly. With that in mind, Kevin, we look forward to the program, man. It's retail week. We'll be checking it out. Target, Lowe's, and TJ Maxx today, man. We appreciate the conversation. We'll be watching at noon Eastern time today, Kevin.
Thanks for having me on, Tommy. Always a pleasure.
My pleasure, as always. Folks, tune in, 12 noon Eastern time. Kevin Hincks, Tom White, the team. Great week of retail earnings coming off. Quite a retail sales number this morning. And some of those stocks, to jump over real quick. I mean, Lowe's, you're getting some action on Lowe's already. You get $4 to the upside on those strong Home Depot numbers. That's just under an all-time high that Lowe's is going to open. We got an all-time high. Maybe we have an ask above that price right now. $239.27 is the all-time high on Lowe's. Home Depot, they're going to be above that number, all-time high at $375. We're going to open at $380. Now, Walmart, not quite the case. Walmart's got an all-time high. Yeah, $153.66. I believe that's the all-time high. Yes, it is. And we've had a couple highs right up near that level recently. When you look at it on the chart, have them marked. 152.57 was back in August. 152 was the high we got just recently back in early November. Today we're going to open at about 146 on their numbers. And what's interesting is you see similar action this morning, at least for Target. Target shares opening basically flat on the heels of the Walmart numbers, 263.75. Now Target, let's back this up a little bit further. It's been quite an uptrend channel on Target. I'm going to take this Fibonacci number off there. I mean, look at this. From last August, we're talking about. This thing has been in this uptrend channel. We get above it briefly in August. We pull back. We get below it briefly in October. And just like that, we're within the upper trend here. You're talking about an upper boundary potentially of 280. on the upside of Target, and maybe 260 right now. We're trading at 264 for Target shares. All right, let's jump around to what else we got going on. Peloton, they're pushing out some paper, and the market actually liking it. You got to love that, folks. I think it's about $1 billion. We'll pull this one up after the break. I was chatting with my dad this morning. He said rightfully, pushing out paper at $45 instead of pushing it out at $120 or $140. If you need capital in the market, which is amazingly somehow what they did, they pushed out paper, why would you ever not do it when you got this stock rocking from $17 up to $170, right? Instead, they're going to push it out at 47, but the market looks like they're appreciating the fact that they'll have some capital. They're up $2.50, not bad, to $50 for Peloton right now. That's almost a 5% move when you look at it. All right, folks, we'll be coming back for the open. We get the S&Ps down by 3, NASDAQ down by 33. We'll take a little bit of a longer look at Peloton when we get back. We'll take a look at some of those retail stocks. We got Kohl's coming out with their earnings later in the week. We'll take a look at that as well. We'll be right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&P flat right now, 46.78. NASDAQ 100 slightly in the red by about 1/10 to 0.2%, down 22 points. You get the Dow up 0.2%, 36,071. Home Depot shares up about 3%. That's an $11 move. Walmart, down about 1.5%, down $2 to $144.70 for Walmart shares. We jump over to Lowe's, trading higher with Home Depot, up 2.5%. We jump over to Target, trading a little lower with Walmart shares, down about 25 cents. And let's jump over to Tesla. Tesla shares down about 0.2% right now to 1,011. And before I get back to Peloton, jumping over to Tesla. So we got a couple stories out here on Tesla. News out last night. JP Morgan sues Tesla for $162 million in warrants dispute around Elon Musk take private tweets. Now, the dispute revolves around repricing of warrants based around Tesla CEO Elon Musk's 2018 statements about taking Tesla private. I think I referenced these even yesterday, right? It was when he talked about taking it private at $4.20 a share. And again, so the dispute arose when JP Morgan made adjustments to the value of the warrants when Elon tweeted in August of 2018, more than 3 years ago, that he was considering taking the company private at $4.20 a share. And again, when he rescinded the idea of privatizing Tesla a few weeks later, JP Morgan claims they had a contractual right to make those adjustments. Tesla said in a letter that they were unreasonably swift and represented an opportunistic attempt to take advantage of changes in volatility in Tesla stock. My argument is that Elon Musk gave them that opportunity by his reckless behavior as a CEO and chairman of a public company. Can't do that, folks. That's the reason why he got in trouble. It was almost, I remember thinking to myself at the time, so in the 16 months that followed, Tesla bottomed out at a 3-year low of just under $1.77, remarkable where we are now, before shooting past $4.20 in December that year. We have a stock split after that, too. I think we do. Maybe that's prior to the stock split, but I think we do have a stock split prior to that. In total, Tesla failed to deliver 228,000 shares of its common stock, leaving JP Morgan with an open hedge position equal to that shortfall. Bottom line is the CEO can't be out there doing that stuff, taken private at a specific price. That wasn't the plan. They had no funding secured. It's reckless behavior. It affects the markets. They're likely to get sued. We talked about it at the time. And JP Morgan, now they're suing them for $167 million, $62 million. They're probably lucky it's not more, because you could have traded off that information. He's a officer of that company, and he has a fiduciary responsibility not to lie in the public to affect share prices. And if he says taking it private at $4.20 funding secured, you should be able to make a reasonable assessment that you can judge that as a reasonable statement from an executive and trade off it. If it turns out to be false, which I'm pretty sure it did because funding was nowhere near secured, you have a right to sue for damages. Nonetheless, interesting. Now, jumping over to Mr. Musk and his sales of shares. How about another $1 billion worth of sales almost on Monday? So, 934,000 shares, 930 million. That adds to 6.9 billion. If he wants to get to a 10% stake, he's got to sell about, they got the number down here. Where's he got to get to? 17 million Tesla shares, more than double the 7.3 he's sold so far. They put it up on the graph here in terms of his sales. Okay, you see where he's at right now. He's at about 7.3 million. They mark it colored by day to get to 10%, which he may get to. He did that Twitter poll, and he said, I'll abide by the results. It seems like he was pretty confident they were probably going to say sell, and he is now probably going to sell. That would be if I had to make a binary bet. Now the odds would determine which way you go, but I'd say yeah, he's probably going to sell 10% of the shares. That's the number he put up there on Twitter. There's no reason why he's saying he won't. He sold $1 billion worth of shares just yesterday, so he's obviously not done yet, right? It'd be very coincidental if yesterday was the last day that he sold, considering he just sold $1 billion. And we jump over to Tesla, up. That's right, Tesla positive today, up 0.9%. Can't make that stuff up. I'd say Tesla has held up really well, staying over $1,000. I think we're probably right back near $1 trillion valuation right now for Tesla. We are 1.02, back over the trillion mark for Tesla, as we have these markets climbing a bit as well. All right, jumping around to, I'm trying to pull up one story. Give me one moment here. A little bit slow. I had that Peloton story up for some reason. Not cool. Here we go. Perfect. So Peloton is going to offer $1 billion in shares following a sell-off. That's exactly the point. They're going to sell $1 billion of stock. That follows a 45% decline. If you needed to go to the market for $1 billion, why didn't you go to the market at higher levels? Just a total mistake from the management over there. First public offering in Peloton since 2019 IPO at $29 a share. You got Goldman Sachs and JP Morgan. The two lead banks on the IPO are going to underwrite the new deal. And as I pulled up earlier, you're getting an uptick in the market right now, and you have Peloton up 3.6% on a dilution of their shares to the tune of $1 billion. Can't make that stuff up, folks. We jump over to the Analyze tab. You're talking about a company right now that's only valued at $15 billion. This is not a marginal amount of shares that you're pushing out into the public, folks, okay? $15 billion, and they're pushing out $1 billion to the public, and the market's up 4.5%. They must have been a little worried about their cash security, would be my guess, if you're getting that type of an appreciation. If they're really that worried about their cash security, then they made some monumental blunders, because you were chopping around between 100. You were above 100 for the better part of September to September, a good year. And then what happens? You go from 100 to 50 over the course of the last few months when Peloton just totally misjudged their business. If you're that close to misjudging your business, why didn't you go to market at 100 to 120 bucks? Probably because they didn't want to dilute the shares at that price if they didn't have to. Put themselves in quite a predicament having to dilute it at 50 bucks a share instead. All right, jumping around to what else we got going on. Where do we jump to next? Yeah, let's jump to Bitcoin. Drops the most in September. In a broad retreat from the records. We talked about Bitcoins earlier, below 60,000. You're talking about an 8.2% move. Ether was down more than 10%. Now, this is what's remarkable. Remember, values were at about $3 trillion for the entire crypto market. It's now at $2.7 trillion. $300 billion in market cap has been just completely wiped out overnight in the crypto market. Now, yes, that's sometimes diversified, but even in these main coins, it's often talked about how localized the ownership is in certain accounts. Just remarkable, the sell-off in terms of the value of $300 billion. As these markets really rise, it'd be interesting to see if we ever get like another 50% pullback or something like that. You're talking about wiping out trillions of dollars that people are somehow counting in some capacity in their stock accounts. Hopefully, the new generation of retail traders, younger traders, crypto traders are not counting that money before they let it hatch, as in, you're counting crypto money at $3 trillion valuation. There's a very real chance that that gets cut in half in terms of the value of that. You better be pricing in some level of risk to that degree, because the markets, anytime you can lose 10% in a day, you better believe you can lose 50% over X period of time. All right, and just like that, we get a lift in the markets. Let's jump. What do we got Walmart doing? Walmart's still down 0.5%. Home Depot up 2.6%. We got Amazon shares up 0.4%. We'll check out some of the other retailers when we come back from the break, folks. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got Amazon up about 0.5% right now, jumping around to some of the FANG stocks. You got Microsoft up 0.2% right now. Apple shares basically flat. We jump back to Tesla, see how they're moving. Up 1.4%. We jump to Peloton, continuing the run. Check that out. Peloton up 7.6% as they go to the market to raise capital for $1 billion. Not a bad pop when you're diluting shares. 7.2% to the upside. We check out some of the stocks with earnings. Walmart down about 0.9% on pretty decent earnings for Walmart. You got Home Depot accelerating higher, up 3% now at 382, was as high as 387. We jump over to some of this other stocks with earnings. So TJ Maxx, they are out with their numbers. No? Yes, there it is. November 17th, tomorrow. You got about a $3 move priced into their numbers, a $69 stock. We take a look at this chart. We put it back on a 3-year weekly. You can see kind of chopping around for the better part of this entire year, right? A range of about 63 up to 70, maybe up to 75, you could say, the upper boundary line this year. Kohl's out with their numbers, I believe, Thursday? Let's check it out. Analyze tab. Earnings. Yes, Kohl's out with their numbers on Thursday. We take a look at the Kohl's chart. Kind of some similar action, which is why I pulled them up, right? Kohl's, TJ Maxx, we accelerate well off of the lows we had last year, but we've been chopping around for the better part of, we're talking about now 8 months in Kohl's shares. The upper boundary about 60, lower boundary about 50. Kohl's pricing in much bigger move compared to TJ Maxx. I mean, look at that move. We're talking about a $5.32 move for a $58 stock. TJ Maxx pricing in a $3 move for a $69 stock. For some reference there, Target shares, you're talking about more than a 5% move, close to almost a 6% move, 5.5% move, maybe $14 for a $263 stock. Lowe's shares, you're talking about just under a 5% move, $11.53 move, coming from $241. All right. We're in the trading business, which, whether you know it or not, is the gambling business. You can have a positive expectation. You're still gambling when you're putting money up, folks, in the interest of making a profit that you may lose. And one of the ultimate gambling events going on in Las Vegas, and let me pull it up, the World Series of Poker. They've reached the final table of the main event. Got to play the main event once myself. Hopefully I'll get to play it again at some point, but it's no small feat. $10,000 cash is what it takes. Remarkable that this year, now this is run by Harrah's, which is Caesars, and you're talking about, they pulled in, let me get the numbers here, because you're talking about 6,600 people, I believe. Yes, 6,650 people all put up $10,000. You take out the small VIG. I think they're paying, I think the VIG is $9,700 goes to the prize pool about, and $300 goes to the house. And it does take a lot to run this. It's almost a 2 to 3 week affair, getting from 6,650 people down to 1. Total prize pool, you're looking at $62 million in that, and they've reached the final table. And to show you what they will get, you're talking about $8 million up top, and you have the 9th place finisher guaranteed $1 million already. And as you can see, 10th place getting a sweet $585,000. And they do stream this on PokerGo.com, I believe is how you stream it. That kicks off at probably 4 o'clock Pacific time, I'm guessing, for the main event. But that's some great poker. I did sign up for PokerGo last year. Had a little bit more time. No, 2 years ago. Last year was an off year because of the pandemic. But you can watch it all live, which is pretty cool. And they'll be playing some high-priced poker over there, going for $8 million for first place, along with being crowned main event champion for the year. Pretty cool over in poker. And they had they took a lot of grief at first because you need to be vaccinated to play. People were worried with the demographic that you're usually running into, whether it's younger males, sometimes not. They were worried about the turnout there because you had to be vaccinated, and they almost broke a record, 6,650 people for a $62 million prize pool over in Harris, and they'll be playing out the main event tonight for $8 million cash. That's some cool poker to watch. All right, jumping around to what else we got going on. Speaking of action, our man Larry Pesavento, folks, tomorrow, this is your last chance. You can get into his live trading event for 5 hours, 9 a.m. till 2 p.m. I'm going to be talking to Larry after his program today, making sure he's good to go, ready for tomorrow's action for 5 hours. It kicks off at 9 o'clock in the morning tomorrow. It goes till 2 p.m. Eastern time. He'll be live trading in that event, 5 hours. We've also invited anybody who attended his live event in August. They'll be able to go for free. That always creates a good room of traders in there, bouncing questions off Larry, bouncing trading ideas. He'll be talking about the methodology he uses, that he trades the market with. I encourage you to click on the front page of TFNN. You can see exactly what he's talking about. With that, you get a month of his Fibonacci 24/7 newsletter. If you've never attended one of these, folks, they're a great opportunity to watch Larry live. Kicks off at 9 o'clock in the morning, $295, and you get a month of his newsletter as well. That's a $97 value, so brings it down to under $200 basically. And if you're a current subscriber for Fibonacci 24/7, you do just receive your next month for free. So there's the automatic value there as well. Check that out on the front page. And of course, Larry will be coming up with his program at 11 a.m. Eastern time today. All right, jumping around to what else we got going on in terms of stocks with some action today. Jumping down the list, we talked about Home Depot. We talked about Walmart. You have Advanced Auto Part out with their numbers. $321 a share. Beat 287 was the market. Beat on revenue and other key metrics. Seeing higher than expected inflation headwinds. That's how I wanted to get to. Higher than expected. Advanced Auto Parts, AAP is their symbol. This thing has been quite a juggernaut. We're talking about basically flat on their numbers. We have a bid ask at 237 by 239. You came into 2020 at 160. You came into 2021 at 160, and we're up about almost 50% on the year. You back this thing up even further, and you're talking about, we had highs back in 2015 of about $200, and you have just floored through those this year. I mean, quite the run. And look at these double bottoms, right? You got to love technical analysis when it looks this clean on the chart, folks. We have a top at the end of 2016. We reached that level at the end of 2018. We pull back to the level that we also saw at the end of 2017, and we blow right through the area that we had in terms of resistance at $200, and we're trading at 238 to see the action this morning. There's your action on their earnings and the conference call, trading up a bit off the lows we had for Advanced Auto Parts. Yeah, we talked about Tesla and what they have going on. And Workday, we'll finish it up with positive in the pre-market. They get an upgrade to buy from neutral on stronger HR systems, WDAY. And it gives it back a little bit to 297.78, just that quick for Workday. And let's jump over to Walmart and Home Depot. Keep an eye on those two on the heels of the strong. I mean, look at Home Depot, this market. All right. And I'm going to bring up one final one I want to get to because you talk about rent. Here we go. You want to talk about inflation, folks. Rent for single-family homes. I'm going to talk about this when we get back from the break here because, man, 10% in September, pricey for sale market and job growth. I mean, we all know why it's going up, as in the forces that are pushing this real estate market higher. We have low interest rates. We have people with plenty of cash. People are working from home more often. Inflation is just a big component of everything. But boy, you start getting into the cities, folks, in terms of the numbers that we're talking about here. And they break it down. We're going to get into more of this. I just want to tease it. Miami was followed by Phoenix and Las Vegas at 19.8 and 15.9. Miami, 20. Florida rental market, folks. We're going to finish that up when we get back. Stay tuned. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the market up about 11 points right now. The Dow catching a bit up 200, helped by Home Depot out there. Jumping back to that rent article, before we do, actually, I had NVIDIA up here. They're talking about NVIDIA and the YouTube Tiger stand correctly. Yeah, we got NVIDIA earnings tomorrow as well. NVIDIA, about a $15 move priced in, so just over a 5% move, $298 stock price. NVIDIA, big week of earnings in terms of retail and some of the chip stocks as well. Jumping back to the rent, 10.2%. in September. Boy, these numbers, though, when you get into it, right? Whether you break it down, rent growth is strong in every price tier, but strongest at the very top. Higher price, you're talking about 11%. Higher to middle price, 10.5. They're still just strong numbers. Lowest priced, 75% or less of the regional median price, still up 8.3%. So you got a range from 8.3 to 11%, no matter where you are on the spectrum of pricing Okay. Miami, though, as I mentioned, 25.7%. That's a staggering number. That means if you're paying $1,000 a month, right, you're paying $1,250 a month. Everybody is across the board. Now, $1,000 a month is a very standard rent that I'm sure a lot of people were paying in Miami. You're paying $1,250 a month. Folks, that's a $3,000 after-tax income rise in the cost of living that is contractually obligated for 12 months, as in that ain't going down. There's nothing transitory about people in Miami. Phoenix, Las Vegas, almost at 20%. You have Las Vegas at 15.9. Those three markets seeing more growth as tourism finally begins to return. Tourism, yeah, I'd say tourism. I'd also say that people are moving away from some of the more costly, busier cities because the bottom, huge cities, Chicago, Boston, Philly, DC, and NYC. Lowest rent growth of under 5%. I mean, those are the biggest cities in the whole country right there. I guess you could say San Francisco, right? You get the West Coast in there, maybe you got Seattle. But the old school big market cities, I mean, those are the biggest ones. Chicago, Boston, Philly, DC, and New York City, all 5%. They're coming to Florida, folks. Come on over to Florida. Visit Tampa. Visit beautiful St. Petersburg, Florida, and look up Tiger Real Estate. They'll get you all set with my dad. All right, folks, stay tuned. We got our man Basil Chapman next. Larry's at 11, and don't forget about him live trading tomorrow, folks. Check it out on the front page of TFNN. Live programming all day at TFNN. We'll be right back.